Good morning, PC. How are you, bete? Hope you will be more happy. It was the last day before the short break. Yes. So tomorrow onward there will be short break. Happy Deepavali for everybody. Enjoy your time. Okay. And take care of your health. Should be maintained and should be good at any cost. All of you, bete. Okay. For this message for everybody. Look after, take care, don't compromise with the health. Health is wealth. Okay, the quotation is right nowadays. It has proven, this quotation has proven itself that really there is a value of health. Okay, KS AP, also good morning. Okay, so today we will discuss government budget and the economy. Government budget and economy. VB, SC, morning to all. Welcome before break. Okay. Anyway, so first objective of the government budget. Objective of the government budget. First objective GDP growth rate. Okay. See, I will be telling in brief only because this time we are revising. So revision of main points, headings, and explanation in short. So objective of the government budget. First objective is is that they want to increase GDP growth rate. This is the objective of every economy, every country meeting, whether one of the developed or developing or underdeveloped country. All the countries having main objective to increase GDP growth rate. Okay, maybe 7%, 8, 9, around 10%. So every country wants that their GDP growth rate, and the meaning of GDP you know better. Okay, so price of goods and services produced in economy in a accounting year. It means more production, more distribution, more income, and more prosperity of the country. Then allocation of resources. Allocation of resources. So see, allocation of resources, private, if you talk about the private sector, so the private sector is governed by the profit. Two are there, one is private and public. So private sector concerned with the profit, so there should be the opportunity for the private sector to invest in the economy, to operate in the economy, production, okay, so that they can also produce the goods in the economy. So investment by the private, investment by the public sector. So public is concerned with the welfare motto. Okay, when you talk about the Reliance and when you talk about IRCTC, so there is a difference. IRCTC with respect to the public welfare. So sometimes loss is also there in the public sector. Still, the public that sector is continued by the government. Provision of public goods. Okay, public goods. So like when you talk about transportation, roads, hydropower. Okay, power supply of the power, sanitation, uh, clean drinking water. So these public goods should be there. Like when you talk about the defense, law and order, okay, protection of the country, law and order, protection, army. So these are the public goods or services which are provided by the government. Redistribution of income and wealth. So redistribution of income wealth means those who are having more income, they should pay more income tax. Okay, those who having more income, more wealth, they have to pay more tax. And the same is distributed to the poor people, those who don't have the sources of income. So subsidies given to the poor and taxes lead on the higher section of the society. Balanced regional growth. Balanced regional growth means all the regions or the part of the country should be developed simultaneously, equally. Okay, they should not be imbalanced, like one of the part, okay, that a part of the country is developing and others are lagging behind. It should not be. So balanced approach should be there. Then employment opportunities, okay, followed by the employment opportunities. The objective of the government was to create more and more employment opportunities in the economy. Last, economic stability. Economic stability. The meaning of economic stability means there should not be recession and we can say inflation and deflation in the economy. So it should be balanced. Economy should be stable. Like due to the COVID-19, so there was an instability in the economy, or there is still instability in the world economy. So different economies of world, they are suffering, facing the problem. So growth is low, output is also low. So like this should not be there. So how to come out from such problems? Well, see, this is a natural or man-made that we don't know, but somewhere China is responsible. But how to come out from such situations? So for that, there should be certain policies by the government. Okay, so government has to make the policies with respect to it. Really. So this is what the objective of the GAM: GDP growth rate, allocation of resources, provision of public goods, redistribution of income and wealth, balanced regional growth, employment opportunities, economic stability. Any query? Do you have any query from these points? Okay. Otherwise, next topic is component of the budget. Structure of the budget. Structure or component. Structure of the government budget. So we have budget receipts. One is budget receipts, another is budget expenditure. Okay, one is budget receipts and another is budget expenditure. Budget expenditure. Okay, so most of the students, okay, I think 7 or 8 students till date they have joined Google Classroom. So I am advising all the guys, please join it, because this time we will be conducting the exam through this platform only. Through this platform only. Okay, so none other platform will be used. Only, okay, 10 students till date they have joined. 10 students. So half of the journey is over for them. Okay, budget receipts. Okay, so in this budget receipts we have revenue receipt and capital receipts. So each having two parts: budget receipts and capital receipts. In the same way, if you talk about budget expenditure, so revenue expenditure and capital expenditure. So sometimes this is an important question and explain with the help of examples. Okay, so there we have to give the examples also. So first, budget receipts. So budget receipt, first I told you revenue receipt. What? Revenue receipt. Revenue receipt. So you have to see the impact on assets and liability. So revenue receipts, do you think reduces the assets of the government? Revenue receipts. Another, capital receipts. So revenue receipts, see, do not create any corresponding liabilities, nor reduces the assets, nor neither creates liabilities nor reduces assets. This is the important feature of your revenue receipt. Neither creates liabilities. For example, income through tax, income tax or GST. Okay, income tax or GST. These are the receipts of the government. but these receipts do not create corresponding liability. These are one-sided payment. Means tax is a one-sided payment and compulsory payment. One and compulsory you have to give. Otherwise, government may put penalty. Financial penalty is also there, or may put behind the bars. So revenue receipts neither creates liabilities nor reduces the assets. So government assets of the governments are not going to reduce because they are not selling anything. Government is not selling anything to get it. Okay. So 2 points always there in this budget, government budget, structure of the government, okay, or component of the budget weightage. Understood or any doubt? Having any query? Yes or no, bete? No doubt? This is about the revenue budget and the capital budget, okay? This is also called revenue budget and capital budget, okay? So, this is over. Now second, revenue, okay, budget expenditure. So, in the budget expenditure, first is revenue expenditure. Okay. So, I not complete, okay, thing. This is pending. This is capital receipts. So capital receipts creates corresponding liabilities. Let government of India borrowed the money from IMF, so it creates liability. Weightage. So your capital receipts creates liabilities. For example, loan taken by government of India from IMF. So this is the liability government of India has to return. Okay, that loan should be returned by the government. So it creates corresponding liability. Okay, and reduces assets. For example, disinvestment. Okay. First, capital receipts creates liability. Corresponding liabilities are there. So when that $100 billion loan by the government of India from World Bank or IMF, so government has to return. This is a liability. Second, capital receipts reduce the assets. For example, disinvestment. Okay, disinvestment. Got it? There were few sugar mills under the control of the government. Now government of India, okay, what did disinvested those sugar mills. Now these has been sold out to the private entrepreneurs. Let government of India received 1,000 crore from disinvestment. 1,000 crore from disinvestment. So this disinvestment will decrease the assets of the government. Weightage. Second, repayment of loan. Let India has given the loan to X and Y country. For example, Sri Lanka. Now Sri Lanka has repaid. So it means now India will not get rate of interest, and that rate of interest was a source of income. What it was? It was source of income. So now that source of income is blocked now. No more India will get. So repayment of loan. Repayment of loan is also the part of capital receipts, but it reduces the assets for the government whosoever is giving or whosoever has given or offered that loan or sanctioned that particular loan to others. Okay, so this is what budget receipts. In this, two parts are there. One is revenue receipts, another is capital receipts. Revenue receipts neither creates liability nor reduces the assets. There you can take the example of taxes, GST, income tax. Okay. Second is capital receipts. So capital receipts, no doubt, capital increases, but at the cost of liabilities. Okay. So it creates corresponding liability. That government of India borrowed $5 billion from World Bank. So this is the liability of government of India. Okay. So liability comes under capital receipts. Okay. So sometimes there is a MCQ. Loan taken by the government of India is a part of revenue sheet, capital sheets. Revenue expenditure, capital expenditure. So that is the part of revenue receipts because it creates corresponding liability. Clear? Second, I taught you about this capital receipts. This reduces the assets of the government. What does it reduces? For example, government of India disinvested and got 1000 crore. This investment means government is selling its property, assets, okay, or disinvesting its running companies which are not performing well. Okay, so government of India made disinvestment IRCTC, okay, railway or LIC. Okay, so government of India is going to disinvest, okay, around 20% of the LIC share. Okay, and the did government also did for IRCTC. Okay, disinvested. So government is getting the revenue for what? For that they are selling, okay, their assets. Okay, bete. So this is about budget receipt. Only budget receipt I taught you. Do you have any query from budget receipt? From this part, budget receipt. No, very good. Now second part, government expenditure. So first is revenue expenditure. Revenue expenditure. Again is impact on assets and liabilities. So always mind 2 point. One is what is the impact on liabilities, impact on this assets. Okay, so revenue expenditure. So revenue expenditure, again this expenditure does not reduce the liability of government, does not reduce liabilities of government. For example, government of India is giving old age pension. What I say? Old age pension, widow pension, scholarships, okay, donations during the natural calamities. So these are one-sided payments. One-sided payments. So revenue expenditure, for example, old age pension, widow pension, scholarship, okay, and some other one-sided payments, okay, with respect to the donation. So these these do not reduce the liability of the government. So government liabilities of the government is not going to reduce with it. Revenue expenditure. So this is about liability now. Next, it does not create assets also with it. It does not create assets. Or we can say revenue expenditure neither reduces the liabilities nor increases assets for the government. Okay, not creates assets for the government because that money is not used for capital creation like pension given by the government, salaries given by the government. So these are revenue expenditure. So they are not creating any asset for the government. Are you clear? Clear about revenue expansion? So like old age pension, scholarship, widow pension, salaries, these come under the revenue expenditures. So this revenue expenditure neither creates neither creates liability. Okay, neither creates assets nor reduces the liabilities for the government. Good. Revenue expenditure. Now capital expenditure. Capital expenditure. So capital expenditure again with respect to assets and liabilities. With respect to assets and liabilities. So it creates assets. Capital expenditure creates assets for the government. For example, construction of road, building, hospitals, national highways, bullet train. Okay. So such expenditures create assets for the government. Like government of India going to set up new industry. Okay, new industry like Indian Oil Corporation, Bharat Gas. Okay, and the Maharatan companies. Maharatan companies. If you talk about railway department, also the asset for the BSNL. Okay, then hospital, then this hydro projects, solar projects, thermal power projects, nuclear projects. These are the assets of the government limited. So capital expenditure creates assets for the government. Okay. Second, reduces the asset. Okay, liabilities. Reduces liabilities. Reduces the liabilities of the government, like repayment of loan by government of India. Repayment of loan by government. Repayment of loan by the Indian government to IMF or World Bank. So this reduces the liabilities of the government. Okay, understood? Okay, so this is what the difference between revenue budget and capital budget. Okay, this is actually revenue budget and capital budget. You can also call it, or structure of budget. You can also call it. Okay, are you clear about the question, bete? Question number second. First was what are the objective of the government budget? Second question, explain the structure of the government budget or differentiate between this revenue sheets and capital sheets, revenue expenditure, capital expenditure, or revenue budget and capital budget. You can also call it. So this way we have to explain it. Clear? Very good. Good job, PC. Good job. Next question. Part of capital receipts. Part of capital receipts. What are the parts component of capital receipts? Capital. What are the parts components of capital receipts? So three parts are there with it. Capital receipts create corresponding liability and reduces the assets. This is what I told you. So sometimes there is a separate question. Okay, 3 marks. Brief about, discuss what, explain about the component of capital receipts. Component of capital receipts. Okay. So point number 1, recovery of loans. Recovery of loans. So don't you think recovery of loan reduces capital receipts? Actually, recovery of loan reduces the assets. Reduces the assets of government. That government of India sanctioned the loan to Sri Lanka, $100 billion. Okay. So in 2017, government of India has given $100 billion loan to the Sri Lanka government. Now in 2020, repaid. It was repaid by Sri Lanka. So by 2020 or mid of the 2020, repaid by Sri Lanka. So now we were getting the rate of interest. That rate of interest was an asset for us. It was creating the, we can say, creating the revenue for government. Got it? So in government was getting extra money, extra payment, okay, through this rate of interest. Now this has been repaid. So when it has been recovered, means recovery of what? Loan to whom? Sri Lanka. So Sri Lanka will not give rate of interest now. No. So Sri Lanka will not pay the rate of interest because already they have paid the capital or principal amount. Once it is over, so they are not liable to pay the interest. So our assets will fall. Understood? So our assets will fall. Now assets are in the sleeping mode. Earlier they were in the active mode. Okay, active mode means earning more for us. Okay, recovery of loan. Next is borrowing and other liabilities. Borrowing and other liabilities. So whenever we borrow, it creates corresponding liability. So this is our liability now. Let we borrow from IMF. Let government of India borrowed from IMF. So this will create corresponding liabilities because government of India has to repay principal as well as rate of interest. So this is called corresponding liability. Corresponding liability, creating the liabilities. So borrowing and other liabilities come under capital receipts. So government can borrow from international institutes. Government can also borrow from the public. Okay, through national savings certificate. Market, and government can also borrow from RBI. So these are the liabilities of government. Third point, other receipts. Other receipts or disinvestment. Other receipts, disinvestment. So I think disinvestment is clear for everybody. Okay. Disinvestment is clear to you or not? Shubham, are you clear about disinvestment? So are you clear with this concept, disinvestment? Selling of the public property to the private sector is called disinvestment. Okay. So when government sells off its share of public sector enterprises or its capital, okay, like Maruti Suzuki. So government had earlier shares of Maruti Suzuki. So over a period of time, government sold it in the open market. Got it? Not that capital receipts created by the government, but at the cost of reduction in the assets. Okay. So this is about capital receipts, component of the capital receipts, recovery of loans, borrowing and other liabilities, other receipts. In other receipts, we talk about the disinvestment. Disinvestment. So disinvestment is also called withdrawal of existing business, existing investment, or selling of the public shares to the private. Okay. Next, last point. Okay, last question from this chapter from my end. The constituents of revenue receipts. Okay, constituents, components of revenue receipts. Parts, component of revenue receipts. Revenue receipts. Constituents of revenue receipts. So first, tax. So there we can categorize tax receipts, tax and non-tax receipts. Non-tax receipts. So tax receipts like income tax, got it? So those who are getting income more than 10 level, okay, that 2.5, then they are eligible to pay the income tax. So that tax is also the part of revenue receipts. Income tax, then corporate tax. Corporate tax. I taught in the income method, okay, that income method, okay, or expenditure method. Income method, profit having three components, okay, profit having three components: dividend, corporate profit tax, and retained earning or undistributed profit. So corporate profit tax, these multinational companies also paying the tax to the government. Then gift tax is also there, and GST is also there. GST. You know about the GST. Then gift tax. Gift tax on the costly things that you are offering or giving very costly vehicle. Okay, 4-wheeler to your someone's. Okay. So you have to pay the tax, except blood relation. Okay. Any doubt? One more point is that is okay. Estate duty. So tax, income tax, corporate profit, GST, gift and estate duties, these are the part of revenue receipts. It comes under tax receipt, tax receipts through tax. And next is non-tax receipts. Non-tax receipts. So first is fees, government fee. So when we pay government fee, okay, fine paid by us. So government put the penalties and fines. Okay, whenever we break the rules or others, okay, other things, that time we are paying the tax to the, okay, paying the certain amount of money which is called fine. So fine is also non-tax receipt of the government. Then income from the public enterprises. Public enterprises. When you talk about Indian Railway, BSNL, Maharatnas, okay, Indian Oil, natural gas. Okay. So these enterprises, National Thermal Power Project, nuclear power projects. So governments also running these companies. These companies are giving the profit to government of India. So that comes under income from the public enterprises. One more point is there, grants and donation to the government. So certain institutions, okay. So let during this COVID-19 period, government of India, that there was one PM Care Fund. So in that PM Care Fund, money was donated by the means almost from the different part of the country. It was donated. It was also donated by individual organizations. Okay, if you talk about Tata, okay, if you talk about Reliance, almost of every company or institute, if you talk about Dabur, okay, or Patanjali, so many institute organizations, they donated certain amount of money to that PM Care Fund. License fees, yes. Okay, PC license fees, yes. If let you want to take driving license, let you have applied for the driving license or for gun also, pistol. Okay, got it. So there we have to pay the fees. These are called license fees. Then exchange fees is also there. Exchange. Okay. So when somebody died without his legal hire, so left out properties goes to the government account only. That there is a one person. Okay. So let 5 crore rupee was there in his account, but unfortunately he died and none is there. His legal hire. So left out property, asset, money will be transferred to the bank government account. So that is also a part of non-tax receipt. Then special assessment. One more point is special assessment. That there is a one village. Now government of India decided to construct one highway, and that highway is going through that particular village. So the value of the surrounding property, land will increase. So due to increase in the value of the property, they had to pay assessment tax. So last point, that is related to the fee, okay, revenue received from the spectrum sale, like 2G, 3G, 4G, 5G spectrum sale. Okay, so when government is giving license to the different companies, okay, particularly telecommunication companies, okay, so that also increases the income for the government. Okay, so these are the constituents of the revenue receipts. Constituents, components, parts of revenue receipts. So tax and non-tax. Keep in mind tax and non-tax. Tax, income, corporate profit tax, GST, gift tax, okay, gift tax, estate duty. Non-tax, fee, fine, income from public enterprises, donation, grants, estate, special assessment, license fees. Okay, so these are the points. Okay, bete, from this particular. So one MCQ should I ask now? One MCQ. Do you think borrowing by the government from international market, okay, do you think borrowing by the government from the international market is a part of revenue receipt? Is borrowing from the international market by government of India is a part of revenue receipt? Yes, no. Let me know. Yes, no. Anyway, no waiting. Okay. That is capital receipts. Borrowing by the government is a capital receipt. Okay. So have a nice time. Good day. Bye. Take care. Okay. So happy Deepavali for everyone in advance meeting. So enjoy your time.